Good morning everybody, welcome to Stockradar Stocks on the Move for another week. My name is Richard Lee, I manage the stockradar.com.au website for you. Today's date is the 7th of April 2023. Well, we've got another exciting week. I tend to say this every week, but the stock market's always throwing things at us, and I guess that's why we love it to some extent. It is always a challenge to us, so at the moment we've got an interesting challenge where we've got the market up near its highs, we've got some stocks looking pretty good. What do we do? What do we think? How do we work? We'll work all that out as we go through the day. Realistically, what we're doing today is talking about managing risk, which is my biggest thing, I guess, managing risk. It's the key to success. So really it is, for me, it is the next big thing for a lot of people to actually understand the concept of managing risk and why it is so important. Okay, once you get that, you'll understand a lot more about your trading. So firstly, let's go and have a look at the top 10 trend intensity ratings. We always want to see what's going on up at the top there. So firstly, we've got Chalice Mining at the top there. We've had a couple of ETFs come in recently, Moat's one of them. We've also got a gold stock in there, Proesis. Qantas just keeps sailing higher. Washington Soul Patterson's starting to break up and explode a bit. The airport's doing pretty well. Chorus is another one looking pretty interesting. EBO is making new highs, and FANG is also showing us that the tech stock might be starting to turn around a little bit, so that's good. So they're interesting stocks there for you. That's the top 10. Of the stock picks of ETS, so it's actually up 4 to 44 stocks from 182. 38 of those are stock picks of the 160 we cover, and 6 of those are ETF picks of 22. And we've actually added a new ETF, a gold ETF for you for next week. So that's what the stock picks look like at the moment. We'll look at the portfolio shortly, but really what I'm doing today is just giving you a snippet of what I do in Stockradar to give you a bit of a taste of what I do, how I work. Hopefully I educate you with a few things, but there's a lot more learning, a lot more stocks, a lot more tips, a lot more newsletters, all that sort of stuff in the website for you to have a look at. So please feel free to have a trial and do that. So the markets have been pretty pumped the last couple of weeks, with some stocks have done well. We know some have done well, while the index remains just shy of the highs. I just mentioned this in the earlier statements. One of the distractors from the main game, because we trade individual stocks. So those individual stocks that look good are fine, but we know there's a bit of a heavy weight in the market with the banks and things like that. So we'll just pile on as we do normally, pile on disregarding exactly what's happening with the index and focus on our stocks. So by joining Stockradar, hopefully we will give you the support and guidance you need to trade successfully using what we do, our strategy. You can adapt any strategy to it. There's some key elements that we have which are very important, which I hopefully will teach you when you use the website. So this week in trading tactics, I just want to go through the next big thing again. We think it might be Pro Medicus, we think it might be one of some of these stocks that are going crazy, but it's not. It's money management, and that's the most important thing. I know I've banged on about that for a while, but it's important for us to understand that, and we might leave that for a couple of weeks and get on the road to a few other things. So let's go to the market straight away. The DowJones Industrial Average, well, it's up a nice. It's had a little bit of a flag correction here. It may well break high. It's got all these few little areas here to get through before we actually go towards the highs. So there's a fair amount of work we really got to see in this Dow before we move higher. Okay, now we've got a little bit of volume here. It's a bit indifferent here. The buyers have come back. It's in a bit of a seesaw from the major high as the battleground goes on, and the momentum index has now come back to neutral territory. So the jury is out, unfortunately. We just have to wait and see. There's no clear trend there at the moment. The S&P and the Nasdaq are a little bit more positive, as we know. We've got some fairly clear areas of resistance here, which we're approaching and we're trying. We've got some constructive things like new highs. We've got some good volume. We've got momentum starting to turn up. So these indices, Nasdaq and S&P 500, are not looking too bad at all. We can see here again the volume on the Nasdaq, which is quite good. We're just approaching neutral area in Nasdaq, so we're hopefully going to push through here. But we've got a couple of areas here above us that is going to cause a bit of resistance yet. But we have a downtrend. We seem to have an accumulation pattern here. We just need to break up to start getting it, looking for an upward move. And it's a new trending phase, which would be very good for us all. Okay, now gold's an interesting one this week. It has pretty well, hasn't toppled the highs yet, but it's certainly up there challenging it. Okay, just up around 2,000, just above 2,000. So we have a couple of gold stocks in there at the moment. We haven't been that positive on it up until now, but if we start to break through here, this is going to look fairly good, because we do have all the ingredients of positive trend intensity with above the average. The volume has been good, and now the momentum is very positive there. So gold is looking reasonably exciting above 2,000, and then we may jump on board some more gold stocks just for the fun of it, and we know how much fun the gold stocks are. So there we are with gold. Copper is not such a happy customer. It's struggling. Any rally seems to get knocked on the head at the moment, but we do have a small uptrend here. We've got some resistance up here. So it's in a difficult phase at the moment. We're trying to work out what's happening here. We're around this point of control, resistance support area. In fact, we're right on it at the moment. So it is a very neutral situation on copper. If you want to pick that, you can. We've got some heavy activity down here, which means there's a lot of interest in selling, a lot of interest in buying, which is sort of what we'd expect after this small rally approaching resistance. So this is positive just momentum. So again, it's probably a little bit a difficult one. We're staying a bit neutral on copper at the moment. And Brent crude, although we had the uppercuts from Saudi Arabia this week, it did have a rally, but really it hasn't really pushed us much higher at all. We're still up around, still within this triangle area, and not looking all that flash oil for a while. It hasn't done for a while, and it's come down from 120 to around about 75. So, and we're above 85. We could get a reaction up. I don't know, a little correction up, but for the moment the pressure is still down on Brent. So there's your commodities for the moment. The ASX 200 is also an interesting situation where we have had this selling area down here from the highs was quite a substantial selling area. And if we look here on investing.com, we can see here this is the highs of the ASX 200. These are the recent lows down here in about 6,500, and you can see here what we're getting here. Let's get rid of that ad if we can. We can see here the volume which we've seen on this downside here. Oh, sorry about that. We just lost that, I think. Well, what I was trying to show you there was, I hope you got a brief glimpse of it, was the volume that we've seen on this move down here, which was very, very heavy. And the rally has not been nearly as good. So, I'm still standing aside in this one a little bit on the index because it is near this major high. We've got a little bit of an uptrend, a little bit of a breakdown here, sort of. But this volume here worries me a little bit here. And as we're at the highs, sometimes we just forget we are at these highs. And it's important. If it breaks through, fine, we can always run with it. Buy yourself a futures contract and run with it. But for the moment, I'm a little bit hesitant on the ASX 200 at the moment. So just watch yourself there, depending, especially if you're trading futures and things like that. Now what I want to look at now is the portfolios. If we go to the portfolio update, this is from last Friday, remember, okay? There might be some different situations this week, which there probably are. So the conservative portfolio is down to 3 out of 20 stocks. Again, have this volume coming down. This is 3 out of 20 stocks. There's a couple of good ones in there, but a lot of them aren't in there. So we've got 15% equities, 85% in the conservative portfolio. Now the 5-stock option, the long portfolio we've been running, it's got 1 stock out of 5, unusually low, very unusually low, 20% equities, 80% cash. So nothing there, 17% return still on that one there. The Energizer 10 has come down again, another one, 6 out of 10, so we've still got 60% equities there, 40% cash. It's not a volatile one like the 5-stock, which can be a bit more volatile, a bit more steady on the 10 stocks, so we've only lost 4 stocks out of 10 there. And we look at the shorter term ones which have been running, the 5-stock I've been running since August 20, is down to 2 out of 5, okay. And the Energizer 5-stock since March 21 is down to 3 out of 5. So they've both been clipped a little bit as well. So everybody's down a little bit neutral, hanging under our money, risk managing it, whatever you call it. That's what we're doing at the moment as the market enters a very uncertain phase at the moment. Okay, so that's the portfolios. We'll go to the next big thing a bit later on. I've shown you the index there, so that's good. Now, so what we're going to go through now is some stocks for you, which is our favourite part. Okay, last week we looked at a few stocks, some interesting ones, which some have done well and some haven't, but we're going to recap a couple this week and look at a couple of new ones for you. Okay, so firstly, I usually look at a leader to start off with, and if we start off with this one here, it is an interesting picture finally. I'm not too sure what will happen today. It's going to be a bit of a flat day, I would think, but still. This is Telstra. Okay, so we've been watching this one for a while. We've got a sort of a fairly steady uptrend coming through here within this trading range here. Let me just close a little bit up so you can see a little bit more data here. So you can see where the lows are down there. This is the rally. So it's up near its highs at the moment. It's just breaking its highs this week. Whether it holds or not, we're yet to see. But for the moment, it's above the average nicely, which is turning up a little bit. We've got some very good volume, and the momentum is very positive. So it currently has a quite good trend intensity rating of +2. It's neutral, but if it does clip above here this week, close above here, then we're going to get certainly going to get a qualifying trend intensity rating on Telstra. So there you go. Telstra finally maybe going to break higher again. Who would have thought? The market always surprises us, but we won't really we battle on regardless. These are the signals we use. We don't listen to anything else. This is what we use to make our decisions, and a decision will be made by Telstra depending on where it closes. So as I said, nothing really matters until this breaks. Price is always the most important thing. I've got all these lovely indicators down here, but I still need price to confirm. Okay, so Telstra looks pretty interesting. And if we go across to another one, which is a New Zealand-based one, Chorus, which is also the telecoms business. The reason I'm showing you this one because it's quite interesting. It's had a big range trade here for a while. It eventually broke up into a little out of a trend reversal pattern here. Came back. It didn't go off here, luckily, but it's now rallied again. Now it looked like it was going to falter here again, but it's come back up here again. And if I just wind this up a little bit, you can probably see a little bit of volume appearing here, which is certainly encouraging. On this last run up here, all of a sudden this has started to run up again. The sellers have disappeared, and now we're nearing the highs. Now this is an all-time high, so that's a significant thing for me. All-time highs are always significant, the most important signal. If I get a break there, then I'm certainly looking for a run. It doesn't always happen, but most times it will do, and if we manage it properly, we're still going to be okay. So CNU is certainly worth watching. It's looking very resilient to me, as is Telstra, which has sort of come down, rallies up. It's been, for a while it's been 2 steps forward, 1 step back, but now it's starting to give a bit of a break, and Chorus is also looking pretty good here. And we've held this one for a while. We've got that signal back here with all the alignment of the stars. Okay, which we always love. Okay, now Deterra Royalties is another one which has been interesting. I talked about these stocks that are recent listers or demergers, and we know exactly what's happened with Deterra Royalties. It's traded in a range since listing of about 5 to about 4, or just below 4, and now we've got this market trying again at this high point here. Now it's a good yielding stock. This is a very good defensive support level down here, but what we're seeing down here, if we look at this, a bit closer, just going to get my back together again. If we look at this a little bit closer now, we can see the volume through here, which has been very high. Now, interestingly enough, the price is back up, it's still up around near its high, so that's a pretty good sign here. A good wave of selling here, but we've seen a good bounce here. It's only one week bounce, but we'll keep an eye on this one because it really is will be a good trade if it does get above here for the moment. But we'll just have to wait. The momentum is still positive. It's sort of above the average. It's just a break out of a trading range. So that's what I'm looking for, which really sort of defines what we're thinking about the market after a period of uncertainty when stocks list and when they demerge. A little bit of uncertainty about the future. So this one really starting to settle down now. And hopefully we're going to see a break through this $5 level to kick off a new trade for Deterra Royalties. Okay, now, so that's that one there. Now, a few weeks ago I went through the health stock. We had a good look at them. Some of them were looking pretty good, some of them weren't, but we had one big one in last week, big health stock in last week. And we've also got this week, we can see Cochlear, which has been in a range for a long time, since before 2020. And now we've got a higher low up here, but the stock has rocketed up here pretty quickly, especially the last couple of weeks, towards these highs. And these are all-time highs again for Cochlear, so that is significant. Trend intensity rating is +1, so it's ready, cocked and ready. It's above the average. Volume is middling, which often happens with these stocks, CSL, Cochlear, tightly held stocks. It's very hard to get a good volume reading on that. That's why you use some other indicators just to add a bit of depth to your analysis. So here I've got very strong price momentum. Reasonable volume, it's above the average, and now I'm looking for the price action to confirm what we're seeing down here. So I'm managed to take it through these highs. So keep an eye on Cochlear. It's an interesting stock, and it has been in a big trading range for a while, and a breakthrough will be a very positive thing for Cochlear. Okay, so keep an eye on that one. Okay, now we've had some really good winners of late. Although the market it's had a couple of good weeks up, but it's been wobbling up below those highs. We've seen Technology One, which continues to rally and be very strong. The momentum is strong. There's some good volume here in the last little rally here. Trend reversal, new high, up it goes, up it goes. So trend intensity rating has been +8. So that's been a good one for us, although it has been a little bit jumpy. So we've had to sort of try and hold our metal there and follow our signals and follow our rules, which we have done. So that's why the stock is now at new highs and we're still in there, which is great. Soul Pattinson looks like it's exploding higher again after a period of, it was pretty quiet for a while. It did break up here back in sort of February, but it then just sort of subsided a bit. But we've got some good support coming through here at around about $27, or just below, or just above. It's now seems to have broken clear of this. And if I just can wind up this volume a little bit for you, You can see what we're getting here. We're getting, so these last 3 weeks of strong price rallies, we've seen some good volume. Momentum is positive, it's above the average, it's getting a trend intensity rating of 10. So it's all things a go for Sol Patterson at the moment, and it's looking very, very good. Okay, WiseTech. Now we talked about Nasdaq looking pretty good today. I've looked at WiseTech recently. It's looking great. It's making this new high. I just want to show you this because new highs are fantastic things. We're starting to raise our stop already on this one. Trend intensity rating is 9. The price is good, the volume is good, momentum's good, the average is good, and this is one you just need to follow with your stop. Simple as that. Remember, we're cutting our losses, maximising our profits. So we've got to maximise those profits to neutralise some of those losses that we inevitably are going to take. So WiseTech is going to help us do that. Okay, then we talked about briefly about Sonic Healthcare. This one is looking very interesting. We've had some great volume here. Momentum's turning positive. It's starting to break clear of all this area here. So we're now starting to reverse this downtrend. So we had an accumulation phase above here. It looked like it was going to break down here for a bit, but it was whipped straight up. And the sellers sort of took this as a bit of a knock, I think, and they've now sort of got a bit more reticent, and they may well be short covering at the moment, i.e. buying back their shorts, which is what means they're going to have to buy, which adds to the already strong buys, and we can see some good volume down here. So this has been a good one. It's had a very good correction, Sonic Health. So some of these health stocks are starting to look very interesting. I talked about EBO the other day. It's making new highs. So Sonic Healthcare looks very interesting for us. AGL Energy, I showed you last week. I just really wanted to talk a little bit about this because it's interesting. We know the huge downtrend that came from like $150 or wherever it did, not really, but it was well above $20. It's come down in a very straight line here, fairly clear downtrend, and now we've got into this trend reversal pattern. So this has been taking since the start of 2022, so it's over a year. Which is what happens, but we just wait and we just watch this, and all the signs are good because we've had this rally, we had a pullback to a higher low, didn't quite reach the top of the range there, came back, still got supported again, and now we're seeing a bounce again, and all of a sudden the volume started to pick up and it's starting to move above the average. So we're now starting to look at this area fairly seriously. And this is just a really simple picture of how all the different fundamentals can be all combined into one thing, which is a chart, and what the price action is doing. And the price action is you, the investors. It's your behaviour that tells me what the price is going to do. And at the moment, it's trying to go high on a short-term basis, yes. On a longer-term basis, which I look at for perspective, they'll have to wait for the resistance to break to give me a positive signal. But there's plenty of time to wait and be patient. I don't need to get in now. I can just let it all happen. And it's a very, very good looking trend reversal that AGL is developing. Okay, another stock that's also looking interesting. There's a lot of these stocks that are poking their noses up again, which is sort of exciting a little bit. Now, this is Orica. If we can just see some titles here for you. Okay, well, so Orica, I've actually got a long-term chart sitting here for you. Just trying to show you exactly what Orica's been doing. This is the last sort of 3 or 4 years. It came down with a big cycle low here, going back a long way. And it's now right here. We've had a couple of false starts, trying to break high here, trying to break higher here. It's come back and it's sort of forming a larger trend reversal. These breaks, I think it happened in an Aristocrat too, where you get an early break. Sometimes it doesn't work out as a trend reversal because sentiment can be very fragile in the early stages, but often they come back and you have another go. And it's important you take that other go because often that's the one that will do it. So here we are looking at Orica now. All the signs are good. We've got some good support coming through here. Some reasonable selling volume through here, but the price is held up pretty well at the moment. And remember, we're waiting for this sort of area to be broken before we even look at this stock at the moment. So a lot of these things will happen, but it's the big picture that we're looking at, which is really this big trend reversal pattern. And we're seeing some general pickup in volume here. We're seeing a general pickup in momentum. We're seeing a general pickup in price above the average. So it's starting to turn, starting to look good from downtrend through accumulation to uptrend. That's what we look for. So that's Orica for you this week. I'll show you quickly Nanosonics, which I know I've shown you many times, but it's now starting to break clear of this $5 level. It's looking fairly interesting at the moment. We've got a bit of volume happening here. We've got some momentum happening here. We're getting close to what we want to see for Nanosonics. So, it's an interesting stock. I know it's a biotech and they're going to be a little bit volatile, but if you're in that game and you like that sort of excitement, then it's looking quite interesting now, Nanosonics, and worth you casting your eyes over that one. And just finally for you, and believe it or not, a mining stock, and we've made a bit of money out of it. We find it very hard sometimes, it's so volatile, but so far we've got Chalice Mining here, looking pretty good. and so far still holding its trend. Let me just blow this up so you can have a good look at it. Okay, so we've had our highs up here. We've had a downtrend move. We've had a bit of an accumulation pattern down here. Then we've got our signal down here at around about 490, wherever it is. And we've got the volume expanding. Momentum wasn't quite on board yet. It comes on a little bit later with trend reversals usually. It moves above the average, and you can see this confluence of downtrend, horizontal resistance, and moving average, all telling us this is the spot we've got to look at. The odds are that the price is going to go up from here, and it does jump. It then goes sideways, and it's now jumping again. So we did get lucky with this one so far. We'll keep an eye on it. We're keeping our stops nice and tight for this one. So we've got like about 40% at the moment, and hopefully we might even see a $10 price tag on it. God forbid it happens, but anyway, I'll hang on for that for the moment. But it's performing pretty well for us, this one. So finally, I'll go through. Well, I talked about I think REA last week. I did talk about REA, which has moved higher. Car sales and Seeker all looking very interesting in that area, and I think it's quite high in the trend intensity scale. If you go to the trading centre to see where these stocks are, and that trio is fascinating at the moment. I'm also looking at Webjet, which is this tourism thing that's starting to happen, and we've seen Qantas how resilient that stock is, and we're well on board this one and had a good kick higher again yesterday, so we're quite excited in that one. We love Qantas for the moment. And I talked about Chalice Mining. Okay, now the other ones, really lots of stock picks poking their noses high, and lots of stuff on Stockradar for you to have a look at. Members have lots of stocks in the alerts bank ready to go. So you said a couple today, and there is always more. I would be looking at things like ALQ, Aristocrat, Brambles, even WOW, Woolworths, Coles, and are looking interesting again, and Transurban. So there's some of the stocks you might want to have a look at there. Check them out in Stockradar. A quick look at ALS for you. You can just see this stock here. It's always been an interesting stock, ALS. It attracts some interesting stories and events. But for the moment, we saw a bit of a knockdown in price here, some bad news. But all of a sudden, the buyers have come back in here and jumped this stock again. Now, the interesting thing to me here is we've had a good correction phase here. We haven't broken down below here. We haven't broken up above here. We're just sitting in this range here despite good news, bad news. Wow, doing well. And I think it's recovering very strongly. I think the investor behaviour is very positive towards this. We saw some selling drive it down. The buyers came back. Momentum is still positive. It's just trading above the average. So this here really will switch things quite positively quickly, I think, if it does get above that. And remember, this is an all-time high for ALQ, or for ALS. So that's a very interesting stock. So keep an eye on that one, and we'll be following this one pretty closely, as we will the other ones I mentioned there before as well. So that's most of the stocks I've got for you today. A lot of those stocks, like I said, like Woolworths, Coles, Transurban, all getting set amongst many others. So go and check out the Trading Centre for regular updates on these stocks. Okay, now I want to go to the trading tactics and talk a little bit about managing risk and why and all this sort of business. So firstly, the next big thing. Now, I could focus on Pro Medicus, Ticker Data, Endeavour, Next, CIA, or Core Lithium. Who really knows what's going to be the next big thing? They're all exciting things, but really for you or for any trader who's learning this sort of stuff, the next big thing is to risk manage your trading operation, because that is the key to it all. Most people will have a win-loss ratio of around 50%. Some people will claim it's 60, 70, 80. Well, that's their business, but 50% is a general, considered a reasonable win-loss ratio from any trading strategy. So it's a matter of minimising those losses and maximising those profits. And if you can do that, the 50% win-loss ratio doesn't matter too much. So you risk manage everything, which is so vital. Okay, so let's get real. Jeff Bezos, hold on to your money. Great idea. He's done a very good job of holding on to his money, and I'm sure his business is very well risk managed. Get real. Nicholas Starvis. Now, he's a bit of a favourite of mine. I like his dancing thing, his distance from the market. He was many years ago trying to work out what was thinking. He did it all himself, but he was a key proponent of managing losses. I'm just going to read this a little bit to you. Firstly, there is no sure thing in the market. I was bound to be wrong half of the time. So he's accepted that premise that will happen. So that's a good start. I must accept this fact, which he has, and readjust myself accordingly. My pride and ego would have to be subdued. So when you're wrong, don't let your ego get in the way. Do what you're told and make sure you do act, otherwise it will cost you. I must become an impartial diagnostician who does not identify himself with any theory or stock. The art of charting, or the art of using price analysis, to look objectively at what you see. and not try and data mine and try and put things on there. If you don't have rules, you can say, well, I might use this indicator today, I might use this indicator today, because that suits what I think. So really the best part of it is to have a set of indicators that you do use and look objectively at those, and that's what he's talking about. I cannot merely take chances. First, I have to reduce my risk as far as humanly possible. And I'm going to go through a little bit more about the cost today, just because it's just a vital thing. So this is how he saw it. Those two things the premises of ego, being right 50% of the time, are all really important things that we need to understand. Because if our expectations are wrong or they're too high, we're going to fail, and that's a really bad thing. So we need to get all those things in the right spot. So let's put it into action. We have taken losses. We all do. We all will. The key aspect is management, and this last year or so has been terrible. It's been a really difficult thing for trends, but these things happen in markets. For all trading strategies, you will have difficult times, and that's the real time when you must manage so carefully. It's all about minimising that risk. Too often we take the route of expecting high reward, and with that comes high risk. Okay, risk can be conveniently ignored if we want to. Things like hope and greed will do that. Is that where we want to be? I'm not so sure. Sometimes it's simply the boring old that does the job, and it's so true. And it's a difficult thing to accept sometimes, because we like the excitement of the stock market, but there needs to be some real poise and perspective when you're actually trading for making some money, or trading for a living, whichever one you're doing. Okay, so it's very important. So not just trading risk. There's trading risk, there are stops, trailing stops, stop losses, stop profits, things like that. But there are also there are other things. So we need to take solid and constructive steps. We're running a business, we're running a trading business. Okay, so what we do is we reduce our risk. So we work in the top stock area. I find it less volatile and risky for what I do, which is price analysis. If I'm an insider in a lot of these small things and I know these businesses, then that's a really good thing to do. But that's not what I do. I do price. And so if I use price, I need a liquid market and I need some big stocks. So I use top stocks. That's the safest place to be. I spread my risk through sectors. Okay, I make sure I'm not all in the banks or all in the golds, whatever. It's just a normal thing. Capital risk. Okay, how much you're allocating to each trade, things like that, and trading risk, which is stops and managing trades. Okay, so there's four important parts of it. Other costs you might think about. Now, I'm not just talking about, we're talking about managing risk on a trading basis, but also on a business basis. Okay, so there are things like I talked about brokerage in the newsletter last week, a really important thing, and there's a vast array of brokerages you can pay and services you can get, and it differs a lot. Don't be lazy, make sure you've got the cheapest, make sure you've got the best, and the one that suits you. Okay, the software you use. I use software which doesn't cost me anything, and I get free data for the software that I use, so that's a cost that I don't have. Okay, analysis. Well, I do the analysis myself. It's purely the time I spend, and I choose not to spend a lot of time because I have my own trade plan which does that. So I'm not, there is some fun, and I do enjoy looking at charts, and that's a bit of a hobby more than anything. But when I'm analysing for the market, it's specific. And there might be other things you can think of as well that may be able to reduce your costs a little bit. There are a couple of things there. For those interested, the software that I use is called Pro Real Time. You can download it from the server. All daily data on the ASX is free, so there you go on that one there. Okay, so the stock. Also, I'll talk a little bit about the stock bit count here for a minute. It tells us things, before they happen, thankfully. So all these sorts of things, whether you're looking for a takeover and you see some volume appearing in a stock and starts to rally, and all of a sudden the takeovers allowed, you get the things that people are doing, they'll show up in the price, show up in the volume. Okay, so the stock bit count is a general overview of the market for me. It gives me a guidance as to what the market's going to do. For the most of the time, it's pretty perceptive. Before the GFC befell the market, we were wondering as we were left with no stocks, and the market was still climbing thanks to a few high cap stocks. So we've been taken out of just about every other stock, but the big cap stocks were just holding the market up. A couple of months later, after that stage when I was pretty well down to no stocks, the market collapsed in 2008, down 53%. I take no responsibility for that. I just simply followed a method. And if you look at Nicholas Davis, he did the same thing. And I think it was the correction in the 50s sometime. And it was a big correction, but his system took him out of all his stocks and he had no stocks in the market. So it's really a matter of following that pattern. COVID was a bit different. It was a bit more sudden and we didn't have so much time to get out. but we did get a big benefit on the way up. So every correction is different, but the stock pick count I find very useful. All these physical things that I do and I use are very important to guiding me. And what I think upstairs up here is always biased by my feelings, my mood, all sorts of things. And I've got to be careful for that. This is really trained to look at that and operate that properly, everything that I see in front of me. Okay, so the stock pick count. So the more recent message is the equity exposure stays low at the moment and has for an aggressive momentum strategy. So we're fairly neutral, a lot of stocks, but there are some good stocks out there, be it Qantas or whatever. There's the ones to go. So there's been some big wins lately. Vital to us have been Whitehaven, New Hope, Computer Share, Chalice Mining, Technology One, which is still existing. And despite interest rates being low, we're in the positive position of keeping capital intact, preparing as always for the next run. So we're always still in the game. And that's every strategy has a difficult period. You must go through these difficult periods. You must survive them. So to survive them, you need to risk manage your trades very carefully. Okay. So really, this comes right back to the Stockradar premise. What did I base everything on when I built Stockradar? I had built it on the Stockradar premise, which was, in a trading situation, there are big wins and there are small wins. There are small losses and there are big losses. So what we simply do at Stockradar is cut out big losses. We just don't take them no matter what. And if you simply cut out big losses because you can, you immediately bias your trading operation towards profitability. It's simple. It's just a matter of doing it. Okay? So that's what I really want to talk about as far as risk management goes. Okay? It's an important thing. Learn to risk manage your trades, have a policy, have some rules, and make sure you act on your rules, because that's what it's there for, and don't be affected by outside influences. If you don't fully yet understand the benefit of risk managing your portfolio of stocks, you probably have some way to go to becoming a consistently successful trader, and that's just a fact. Okay? It's not a criticism. You may be in the early part of your learning journey, but I'm just trying to say to you now, put managing risk at the top of your priority list as far as building your trade plan and following it. So once you do get it, you'll probably never look back. Okay, once you understand that risk management is the key to it, you won't look back. So you can't catch every trade, expect to lose, but get over it, like the ego thing, get over it, and move confidently and move on forward confidently. Okay, so that's a really important thing to do. Okay, so as far as it's today, that's about all I've got for you today. We're in exciting times. As always, stay safe, watch your trends, heed your stops, and I'll see you all next week for some more excitement from an exciting stock market. Okay, see you later.